Welcome to the Real Estate Explainer podcast, where we talk about anything and everything real estate. I'm your host, Brian Kiczula. Welcome back to another episode of the Real Estate Explainer. Today we've got Stephen Weisberg on the podcast talking about tax resolution. Let's jump right into the episode. Hey, Stephen, just wanted to say thanks for jumping onto the episode of Real Estate Explainer. We're going to be covering a topic that I know a lot of my clients care deeply about, and that's tax resolution.
Thanks for having me on. I appreciate it. My name's Stephen Weisberg. I am the principal attorney and founder of the W Tax Group. I was in Chicago. I passed the bar, came back here to Michigan, Detroit area, where I'm from, in about 2008, which was a great economic time for everyone in the country, but especially for Detroit. And so I fell in corporate bankruptcy. The car companies were going through it. Basically, everyone was going through it. But to make a long story short, I enjoyed corporate bankruptcy. I like the legal aspect of it, but I was doing a lot of work for suppliers, and a lot of the suppliers were filing for bankruptcy, and they had creditors. One of their main creditors was always Ford, GM, Chrysler. At the end of the day, once the bankruptcy had been complete, Ford, GM, and Chrysler would get paid in full. And granted, they had secured claims, but they'd get paid in full. And then all the little mom and pop and small businesses who had these unsecured claims would get paid like 1 cent on the dollar. At some point, I like the legal aspect of this, but I really feel like I'm working for Ford, the big three automakers, just to make sure they get their money back, which is not really what I wanted to do. I wanted to really work for the small, medium-sized businesses, the entrepreneurs, the sole proprietors, and I wanted to do something else, which I decided to do. Now, how I got into tax defense and helping people with tax debt and other issues is not very exciting. I just fell into it. I had a friend who was an experienced attorney in this realm, and I started working with him, and I learned under him, and then opened up my own shop, which is the W Tax Group, in about 2014. How I got here wasn't so interesting in terms of I fell into it, but I knew what I wanted to do. I knew I wanted to help small, medium-sized businesses, sole proprietors with financial issues, and that's what I do, and I enjoy every day.
Yeah, that really sucks for the small business owners when you're looking at a corporate bankruptcy and it's the smaller self-employed individuals get held. They're basically stuck holding the bag. They're going to put them out of business if their partners can't pay them. That's horrible. Then moving into tax resolution, it's one of those things that I've seen clients that typically just stick their head in the sand when it comes to tax issues. And I think that it's super frustrating as a taxpayer, and I complain about this, I'm sure most people do. Let's say their customer service aspect of the IRS is just missing. I've called them, I've left a message, and on the representative's voicemail, I'll call you back in 6 to 8 weeks. And I'm like, okay, well, 6 to 8 weeks, I need an answer now because penalties and fees are accumulating. And often what I found personally is that the issues, they were not my fault, meaning it was an error on the IRS's side. They didn't receive a document. They didn't scan it in. I had proof that it had gotten there, but it was just such a freaking nightmare. And I hope that moving forward, add some customer service into their overall system. Yeah, now with tax resolution, one of the big things is, when should a taxpayer reach out to you if they have an issue? Because I said a lot of clients stick their head in the sand, and what I've seen is maybe 3 years goes by and they haven't filed their tax returns because they had an issue years ago. So what's your recommendation?
Yeah. And I think a lot of the clients that come to me do have stuck their head in the sand, and I get it. It's like, you don't know where to start. You don't know what to do. You've got the IRS. I can't call them. They're going to put me into the ground. And that's probably true. But what I would say is, I can take that all off your plate, or any tax professional that you come across that you think you want to hire. Once you know that you haven't filed, you should call me right away, because I can take all of that off your plate and give you the peace of mind. I know exactly what to do. I deal with the IRS on a daily basis. I certainly wouldn't suggest that you call them on your own, but when you know that you have a tax debt due, because even you're talking about not filing tax returns, if you have a balance due and you know you're going to owe, you still absolutely should file your tax return, because there's late filing fees on those tax returns, which can be up to 25% of the entire amount you owe. So even if you just file timely, even if you don't pay any of the balance owed, you're saving a large percentage of the penalties there. So whenever you realize you're going to owe, that's when you should call me right away.
What is the threshold? Was it $1,000, $10,000, $100,000? What's the magic number?
Generally, to call someone like myself would be $10,000, just because, of course, you're going to have to pay for the services of myself or another tax professional. And when you're under that number, these just might not make financial sense.
Okay, so about $10,000 is when you really need to call someone to help you resolve these issues. What type of communication can you expect from the IRS? Are they sending you letters? Are they sending you emails? Are they giving you calls? Are they texting you? I know there's a ton of scams out there, and I just want to make sure that people are crystal clear in understanding how the IRS reaches out to them.
There's no email. You have what's called a revenue officer assigned to your case. You may get a phone call, but you're also going to already have gotten letters. IRS is reaching out to you by mail. So 95% of the time, it's going to be a letter that you receive in the mail. It's certainly not going to be text. Just in general, they're using fax. They don't use email. So you'll never get an email from them. And hopefully they get past that at some point. But that being said, yeah, you're going to get correspondence from them in the mail. And I always tell taxpayers or my clients, like, open the mail when you get it from the IRS. There's a lot of taxpayers that don't open it. They might have anxiety, might be worried about it. But some of them think, oh, if I don't open it somehow, that means I didn't receive it. It doesn't work that way. It doesn't matter whether you accept it or not, you were given notice.
Okay, so the thing is, you certainly want to reach out to a resolution specialist as soon as you know that you owe them money, and you want to make sure that you're opening your mail. So this sounds completely silly, but I've had people say, I never got the letter, just like you said, and it's not because they didn't open it. It's because the IRS had the wrong mailing address for the business or for the entity. So I think that's another huge piece, is knowing, okay, if you've changed your mailing address, make sure the IRS knows what it is. You're still going to owe the money, and you're still accruing the fees and penalties. And I would say this goes with anybody you owe money to. I'd say get on the phone and call them. But in this case, it's make sure that you're communicating or receiving the communication. Now, when you're communicating with them, are you mailing them back? Walk me through the process and give me an idea of the timelines that some of these disputes. Is it months? Is it years? Is it decades?
I'm speaking to them on the phone. This may be some mailing back and forth. A lot of it is faxing, to be honest. A letter, if the letter is from someone in the collections unit, I'll be calling the collections unit and speaking to someone there. If it's a revenue officer that sent you a letter, I'll be speaking to the revenue officer, again, by phone and by fax. Like I said, let's just say it's in general collections. You'll get mail, and you have to receive certain notices before they can enforce collections against you. There's a few notices that you have to receive before they can do anything. Two of the most significant, and when people certainly start coming to me, is you'll receive what's called a 504 or 503 notice. And that says it's a final notice of intent to levy your bank accounts, seize your assets, all of that. At that point, they can seize your state tax refund, but other than that, they cannot seize, levy any of your assets or money. There's another letter that still has to come out that gives you appeal rights. And after that, if you don't appeal and you don't resolve the case within 30 days, then they have the ability to enforce collections from you. But going back to the question, when the clients are receiving the mail, then they're calling me. I'm then reaching out to the IRS to start negotiations, or at least to maybe get a hold on the account. I'm usually reaching out to them to do a compliance check to find out how much is owed exactly. What are the interest and penalties? Are there missing returns? What notices have come out? I'm trying to understand the entire landscape of what's going on thus far. And then going from there, working with you and the IRS to negotiate a resolution. A lot of people have probably heard of the famous offering compromise, which I could talk a lot about because most people don't qualify for it. But that's something that could take 9 months to a year. Otherwise, if I get the information that I need from the taxpayer on a timely basis, we could have at least something in the IRS's hands within a few weeks. It might take them some time to make a decision. So it doesn't have to be a long process.
Okay, so it depends on what you're looking for, and it's having that communication, the back and forth. Now, what is an offer in compromise?
The offering compromise is where you are basically offering the IRS a certain amount of money to settle your entire balance. Let's say you owe $100,000, you're offering them $10,000 to get rid of the entire balance. And Most people don't qualify for this, and you'll hear on the radio that everyone qualifies or we'll settle your debt for 10 cents on the dollar and all that, and it's not true. Is it possible? Yes. But again, most people don't qualify. But the way that works is very formulaic. It has to do with your income, your expenses. It has to do with equity and assets. Once we take a look at all of that and see what your quote unquote monthly disposable income would be, at least according to the IRS, what equity you have in assets, all of that combined with all the rules that the IRS has regarding these things, that's when we can see whether you actually qualify for an offer in compromise. And when it works, it's great. And these huge 800-pound gorilla companies in the industry, they have these radio ads that say, we've saved $100,000. Now, that might be true because it happened. I've had an offer in compromise where the guy owed $900,000 and we resolved it for $500. Okay, so it happens. But again, the vast majority of people are not qualified for it.
And that's a big takeaway because I think a lot of people thought that you'd bring in a tax resolution specialist so that I'm reducing the amount of money that I owe to the IRS. So if the offer in compromise isn't the end game for most people, how do your services benefit clients? I'd like to thank today's sponsor, Cost Seg RX, a cost segregation company. If you're interested in getting a cost segregation study, or if you'd like a free estimate of benefit, log on to realestateexplainer.com and click the cost segregation link at the top of the page.
Yeah, there are some other ways to reduce balances through different types of installment agreements where you're paying over time. But I'm going to get my clients the most favorable resolution possible because you got the IRS, you got the strongest, most powerful collections agency in this country. And if you try to do it yourself, they're just going to bury you. And they're trying to get as much money as they can, as fast as they can at once. They're not there to help you. They're not there to bring you along and say, oh, you have this option or this is the best way to go about it. They're not there to do that. So that's where I come in. There might be times where you still do pay the IRS the full amount that you owe, but maybe it's over 6 or 7 years when the IRS is trying to get you to pay it next year.
Yeah, they're going to bankrupt you. Yeah, I need the money now. And if you don't, then the VIG is 24% a week. It can certainly feel that way. You know, when you're looking at the interest and penalties, is that one of the things that you can negotiate down is the interest and penalties that clients are facing?
Interest actually never gets reduced, but the interest is not bad. Their interest goes along with the general interest. Maybe it's 7% right now, but when we're talking about the VIG, it's not going to be 30% or whatever. However, penalties is really where the big numbers come from. As I said, there's failure to file penalties. There's also failure to pay penalties. Let's say penalties for your failure to file and failure to pay accumulated to the most that they could be, then you'd be paying 50% more than what you already owe. So again, you owe $100,000, there's another $50,000 that's going to be added on top in penalties, and then whatever's interests. And there are ways to get certain penalties reduced. There are reasonable cause penalty reductions or abatement, as they call them. There's also what's called a first-time penalty abatement. So if this is like your first time that you've had an issue with the IRS, where you've had no problems over the past 3 years, no late filing, no late on payment, and there's a couple other requirements, but you can actually get the IRS to abate penalties under that first-time penalty abatement.
Is that first-time abatement every 3 years? So if you got it 10 years ago, you can't get that again, or does it reset every 3 years?
So if you owe, even if it was 7 years ago, as long as you were compliant for the 3 years prior to that, then you can get the abatement. And you can get it again, let's say it was 7 years ago, if you owe another balance 3 years ago, you owed a balance 7 and then 3, the 3 years prior to that could have been clean. So you can get it kind of multiple ways.
Okay, that's great to know. I would like to find out, one of the things that pops in my head is interesting cases. Do you have an interesting case that you've worked on for a client getting penalties removed, or resolution in general?
Like I said, really my most interesting is $900,000 down to $500.
Yeah, that's crazy. $500 is what you said.
Now, that being said, it's not so interesting. The guy was basically desolate, okay? At some point in his life, he was making money, but he hadn't in a long time, and he was basically desolate. So we were able to do that. So It's not so interesting. And most people, you don't really want to be desolate just so you can take advantage of the IRS offering compromise. Now, there's other offering compromises where I've had someone owe $1 million, and after we go through the permutations and computations and look at equity and assets, they were able to resolve their tax debt for $300,000 on a $1 million bill. It's not $500, but it's still a very significant reduction based on how much is owed and how much you're actually paying.
Yeah, to relate back to the mortgage world or loans, what you're doing basically is you're qualifying for that reduction in taxes. So you're probably having to provide supporting documents showing that you're just not able to cover $1 million tax bill. Because if you were still, like you said, your client that was desolate, if he was still, let's say, whatever he was, let's say as a doctor earning $500,000 a year, then it's going to be a hard no. You're going to have to pay your bill.
There's a lot of things that go into it. It's not necessarily just about the amount you can pay. It is, but there's more to it. With the IRS, once you have a tax assessed against you, let's say you file a return and you owe $10,000, the IRS has 10 years to collect from you. But after 10 years, that balance goes away. You don't owe that balance anymore. There's only 10 years that they have. You just can't go out 30 years. And some people, they owe $300,000, let's say. For whatever reason, they're not eligible for an offering compromise. And this is another way where sometimes the amount that you owe can be reduced. We might get them into what's called a partial pay installment agreement, where they are paying the IRS something on a monthly basis, but they're not paying the IRS anywhere close to $300,000 by the end of that 10-year.
So even at the end of the 10 years, that partial pay goes away. So you're done. So that would be a way to reduce it. Interesting. And then as we're talking 10 years, what is it? What's the date? Is it the date that you file? And probably any amendments or extensions. So the last date, I would imagine, is where that 10 years clock starts.
So it starts whenever you're assessed with the balance. Like for, let's say 2024, you're going to file, let's say you file return timely in April of 2025. The balance may be assessed in June of 2025. That's when that clock starts. Now, if you amend that return and you owe more money, let's say you owe another $5,000 based on the amendment, that extra $5,000 10-year clock is going to start whenever that extra $5,000 was assessed according to your amended return. The previous money that you already filed for before you amended it, that still gets relayed back to when it was assessed originally. And by the way, let's say you filed the return, you amended it because you owe less, that doesn't restart the clock. If you owe less and you filed previously, whenever it was assessed originally is when that clock starts.
Yeah, very good information. And another reason not to stick your head in the sand. Just keep pushing the ball forward so that if you are assessed, you owe them money, then the clock starts ticking because you want to run that out. You don't want to wait 10 years. That would be a heavy stress or burden hanging over you for that long. So if you could get it resolved much quicker, that's really the takeaway.
Just to go back to what you're talking about, my job is to give my client the most favorable result possible. It may not mean an offering compromise. There's called an internal revenue manual. The IRS knows it to some extent, but they know it. You don't know it as the taxpayer, and why should you? Because you would have no reason to. But the point is, you can use it to your advantage when you hire someone. You can use my knowledge to your advantage to make sure that you're getting the most favorable result as opposed to getting railroaded by the IRS.
Yeah, and I've seen clients too. They are getting hit, and it's not because, they weren't not trying to pay their taxes. They just got hit with perhaps phantom income. It can happen in real estate and often does, and that's really problematic. Or they've got a business and the business has retained income or earnings that they didn't pay out, and they spend the money so taxes are due at that tax year, and they had $100,000 of additional income. But come the first of the year, they spend all the money on whatever type of upgrades they did, but then they file their tax returns, and that $100,000 they needed to pay taxes on, and it's no longer there. So it's not always people trying to avoid the taxes. It's just a simple error. And I think having a professional on your side is definitely helpful. And yeah, I would just absolutely encourage anybody that has a tax liability to reach out to a tax resolution specialist. And with that said, we could go ahead and wrap up the podcast. Before we do, I want to say, is there anything else that you would like to mention? And then certainly I would love if you could let listeners know how they can get in touch with you.
Sure. Two quick things I'd mention, and we already touched on it. When you hear the commercials with the offer and compromise, you probably don't qualify. You're going to call them. They're going to say, yeah, you qualify. Give me $10,000. We'll file the offer and compromise. And then you'll give them the $10,000. They'll file the offer and compromise. It'll be rejected. And they'll say, yeah, we tried. We did what we said we were going to do. It's out of our hands. That's just a big thing with me. People get duped, I guess is the word, by these resolution firms. And it's just horrible. They're taking people's money. So I always like to preface with that. But the other thing is, as you just mentioned, most of the time, it's not people avoiding the tax. You really want to plan ahead. You want to have an advisor that can tell you what you're doing with your money and what needs to be set aside for taxes. But even if you're just a sole proprietor or even just 1099, you just have to realize the money that you bring in, it's going to be taxed. You're going to have to pay taxes on it. So even though you have all that money in your pocket, and if you were a W-2 where you're getting a paycheck and the money comes straight out, you need to set aside, almost automatically set aside some money for your taxes. Don't wait till the last minute and say, oh, I'll figure out at the end of the year. That's really where planning comes in. It helps you so that you don't end up in a situation where you need to talk to me. But that being said, if you do need to talk to me, and we just talked about, there's really no need to be ashamed. People call all the time and I really feel ashamed about it. But you don't have to convince me. I don't look down upon anyone. And again, going back to what we just talked about, people just made a mistake. So it happens. It's not something you have to feel bad about.
Yeah, it's one of those things. I recommend the Profit First system. And the Profit First system is basically, it's just that old envelope system so that every week you're looking at your bank accounts and you're moving money to the savings account so that you're moving money into your profit account, into your CapEx account, and then into your tax account. And it's such good information. A lot of people will do it, but they'll do it quarterly or they'll do it annually. And I would say with what you just said, what I do and what I recommend and encourage people to do is do it every Friday. So if you're a business owner, do it once a week. Move your money into your different accounts so that at the end of the year, you don't get stuck with that big tax bill.
And then in terms of getting in touch with me, I always like to actually give out my personal number. That'll come straight to me instead of going to my company. So that's 248-971-0885. So you can get to me there. Also, go to my website. It's weisberg.tag. That's WEISBERG. Again, that'll come to me personally, and you can work with me on a more one-on-one basis. My company is called the W Tax Group, and that website is WTax.
Perfect. And thank you for being on the podcast today.
Thank you for having me. Appreciate it.
If you'd like to get connected with today's guest, log on to realestateexplainer.com and click the Get Connected button on the homepage.